Copyright in these lectures is either owned by the ANU or a third party who has licensed the ANU to use it. Students may use the recording for personal study only. No lecture may be communicated online, copied or shared without the prior permission of the ANU.
Okay, good morning. I guess I have to use this. I have no choice. Yeah, the microphone is dead. Yeah. Okay, so so today this is the last week, so I'll talk about the remaining issues or topics in Asian capital markets. Okay, so I can finish this in perhaps maybe 30 minutes, and then I'll review the questions that we asked in this course, right? So it will be like a preparation for the final exam. Okay, so what we have not really talked about in Asian capital market is Hong Kong and Singapore. Of course, we talked about part of it, but as a financial center, I thought we should talk about this. So I call this Tale of Two Cities, Hong Kong and Singapore. So we know that both are ranked high as a financial center, right? And I have worked in both places, over close to 20 years. And I have seen how like Hong Kong has developed from the mid-90s, and then how Singapore, started to become the global financial center or the wealth management center in the 2000. Okay. So fortunately, so I have seen all this, and then I've also experienced the Asian financial crisis in 1997 in Hong Kong when the market was attacked. So it has been very interesting, to live, and work in those two places. So, so this is the same graph or the figure that I used earlier. So this is the capital market, right? And this is looking at the equity market capitalization. So it's a market capitalization. And you can see that Hong Kong has like 14%, right, of the entire Asian market capitalization, while Singapore has only 3%. Okay, so this shows that the stock market, right, or the valuation of firms or listed firms in Hong Kong is much greater, right? And partly this is because of a lot of Chinese firms have listed, right, as H shares, and these are fairly large companies, so that's why they have, brought up the market value of Hong Kong. So, and Hong Kong stock market attracts more, more established firms. On the other hand, Singapore also tried to bring in or list some Chinese firms, but I think many of the Chinese firms listed in Singapore are not those main firms. Okay? There are some. So that's why in Singapore, generally, if you just look at the stock market, it's smaller than Hong Kong. Okay? But when you look at exchange rate transactions, you can see Hong Kong, right, and Singapore. Well, if you compare with UK, US, UK, US, obviously other financial centers transaction in currency is smaller. But if you look carefully, Singapore has been increasing or has been larger in terms of currency in transactions than Hong Kong. Okay, so so that's why typically Singapore has a larger forex market or turnover, and also related to this is that they have a more derivatives trading. Okay, derivatives market is more in Singapore than Hong Kong. But of course, Hong Kong probably is expanding its derivatives trading because of this renminbi products, right? So, but historically, Singapore has been ahead in terms of derivatives trading. Yeah. So they are one of the first markets to trade like a Nikkei 225 futures. This is the Japanese stock index outside Japan. Yeah. So that started probably in the 80s. Yeah. So it has a long history. Okay. So this is the ranking, right? So we saw this before. As you can see, Hong Kong and Singapore, right, is way up there in the financial center ranking. Okay, so again, going back to this table of ownership, right? So if you just compare Hong Kong and Singapore, and then this is the, looking at the largest shareholders that have at least 10% of the cutoff. And then if you look at the family, Singapore, Hong Kong, yes, is higher, is quite high, but Hong Kong is higher, right? Like 70%. Of course, this table is from the 90s, so so it probably has changed now, but Singapore is like 45%, right? So family control is greater in Hong Kong than Singapore. But yet, in Singapore, there are many family-controlled firms. Yeah, you have picked in your project. I know some of you have picked the family firms in Singapore. Some have said long, some have said short. Yeah, for different reasons. Okay. So, but if you look at the state ownership, right? So this is where Singapore is very different from Hong Kong, right? So this is because of the sovereign wealth funds. Many of the companies, the major companies, are held by sovereign wealth funds, okay, which is like Temasek, right? So you have, many of you have mentioned this in your project, and also GIC, Government Investment Corporations. Yeah, so so that's where this, Singapore's state ownership, becomes high. But the question is, whether the state ownership is good or bad. It's a good question for Singapore because Singapore's Temasek or GIC, when they hold a company, they actually do chase for returns, right? In a sense, they're chasing the performance. And they do have some influence on the directors. They can send the directors, but they are not like, very powerful. Yeah, they can influence, but they're not like dominant. Yeah, so there are pros and cons, but but as you can see, yes, that's why Singapore has this high, state ownership. Okay. Okay. So this table or this slide compares regulators, central banks, and securities exchange. Okay. So this is where you can see how the Hong Kong system is hands-off. The government is relatively hands-off. Singapore, in a sense, is more hands-on. Okay. So you can see, for example, the central bank, right, where they don't call central bank, but it's called HKMA, Hong Kong Monetary Authority, and their role, effectively, actually there isn't much. Let's put it that way, right? Central bank conducts monetary policy, right? So how do they do that? Well, monetary policy is by controlling or affecting the interest rate, the short-term interest rates, right? If the central bank determines the short-term interest rate, which is basically the rate that the central bank can lend short-term loans to commercial banks. But that is like overnight. It's very short, right? But when they determine that rate, then all the other interest rates will be affected, right? All the government bonds and all these rates will be affected. So that's why central banks controlling this rate is the important part of the monetary policy. So, but Hong Kong is this, right? Hong Kong dollar is fixed to the US dollar, effectively fixed to the 7.8 Hong Kong dollar is equal to 1 US dollar, okay? So therefore, the interest rate is effectively linked with the US interest rate, okay? So that's why the HKMA doesn't have much freedom in terms of conducting monetary policy through the interest rates. Okay, of course they can affect the interest rates, but they are they cannot go far away, right, from the U.S. rates. It does happen when there is some financial crisis, right? So then, like in 1997, the Hong Kong rate shot up, yeah, because the Hong Kong MA tried to defend the currency. But in normal times, the interest rate goes relatively close to the U.S. rates. Okay. So that's how HKMA stands. And then on the other hand, if you look at Singapore, Singapore's monetary authority is called MAS, and they're not just a central bank, but they're also a financial regulator. So therefore, MAS is quite, in a sense, their coverage is very, the regulation and everything is very large. So, and how do they manage their monetary policy? Well, it's very different from Hong Kong, right? So Singapore dollar fluctuates, right? As you can see, it fluctuates. It's floated, but it is actually managed through this MAS. So what they do is MAS manages the value of Singapore dollar as a basket of currencies. And these currencies are based on their trading, okay? Because Singapore is basically an open economy where they import and export. So therefore, the trade is very important. So that's why, based on the trade, okay, I said probably because MAS does not disclose the weight. Okay, they don't disclose the weight. It's secret. Okay, it's secret. But people say that, well, this is probably based on the trade, right? So major trading countries or countries would be like US, China, Australia, right? Japan. So, and also Euro. So therefore, Singapore dollar is probably a basket of, these currencies. Okay. So, so that's how, Singapore manages, or the MAS manage the monetary policy. So their monetary policy is that they don't control the interest rates. They basically manage the currency. Right? If the economy is heating, right, they want to cool down the economy, what they will do is they will increase the value of foreign currency. Okay? So that, sorry, it's the other way around. If they want to, let's say, if they want to stimulate the economy, then they will make the Singapore dollar weaker, right? Because they can export more. But of course, when they do that, the foreign currency value of foreign currency rises. So then, buying goods from abroad becomes more expensive, right? So there are always both sides for Singapore dollar because it's a very open country. You have to export and import, right? If it's like China or Japan, then it's basically export, right? Japan used to be, or still is, like export, right? So therefore, if the yen or yuan is lower, then you can, you export more. But places like Singapore, you have both sides, right? If the Singapore dollar is weak, it's good for exports, but for imports, it means you have to pay more, right? Yeah, so that's why I think monetary authority of Singapore has to balance the both. Yeah. Okay, so that's basically the two central banks. And when it becomes regulations, Hong Kong has different entities. For securities and futures market, they have this HKSFC, Hong Kong Securities and Futures Commission. So they are the regulators of financial markets. And then Singapore is done right by the Monetary Authority of Singapore. And also Hong Kong has this Hong Kong Exchange and Clearing Limited, Futures Exchange Hong Kong Securities Clearing. So this is basically the stock market, the futures market, okay? And also the clearing house, okay? But interestingly, this ownership is a bit maybe dated, but it has been owned by like a Deutsche Bank, right, and government of Hong Kong. But you can see the ownership is very low, okay, of the government. Yeah, it's even owned by a foreign bank, okay. So in a sense, this is more like a private company, okay. On the other hand, Singapore Stock Exchange is owned like 23.45% by this so-called SEL Holdings, which is basically held by Temasek, right, Sovereign Wealth Fund. So Singapore Stock Exchange is more or less, has a larger government ownership, although it's indirect, okay. So as you can see from this, this is just looking at the financial markets, exchange rate markets, but you can see that Hong Kong is more hands-off, right? The government is hands-off. Singapore is more hands-on, although it's indirect. Yeah. So I think that's basically, the difference between Hong Kong and Singapore, although both are, very efficient financial centers. Okay. So this is an interesting story about Hong Kong. So this is when Hong Kong was the colony of UK. There was this finance secretary of Hong Kong called Sir John Cowperthwaite. Okay, so this is an obituary. Basically, this person. He passed away. Okay, it doesn't. Yeah, it's around 2006. Yeah. So when they passed away, they posted, or they had this story about him, and you can. I think you can directly go to the article. But what it's quite interesting about the history of Hong Kong, that they historically, right, the government has been hands-off, okay? So here the story goes that this Sir John Cowperthwaite, he was a financial secretary of Hong Kong in the 60s, right, 1960s, but he had this idea of laissez-faire economic policies. Laissez-faire means market-based, right? So that so he laid, the policies there have laid the foundation of Hong Kong's growth, and especially, like as an international business center. And so it looks like this person, this Sir John Cowperthwaite, had, more of a, like an Adam Smith type of idea, okay? So, so he has been, quite hands-off. Means that he basically argued with the British government. Okay, so Whitehall is basically about the British government, and so British government basically, in this, according to the story, insisted higher income tax, okay? And they did that in Singapore, right? So and then they said, okay, from Hong Kong as well. And then this financial secretary basically said no, okay? So he didn't want to raise the tax in Hong Kong from the British government. And then then he, again, he says here, he's basically opposed to giving, benefits, special benefits to business or a group of businessmen when they were building this tunnel, right, tunnel in Hong Kong. So, so basically, he said that private sector, right, would pay for the tunnel, not the government. So that's what he said. So you can see here, right? This is what he said. In the long run, the aggregate decision of individual businessmen exercising individual judgment in a free economy, even if often mistaken, is less likely to do harm than the centralized decision of a government, and certainly the harm is likely to be counteracted faster. So basically, I think this really tells the underlying, right, basis of the Hong Kong economy. So Hong Kong has carried this tradition, and I think is still carrying this tradition. Yeah. So, but on the other hand, right, you can see Singapore. Singapore is a free market, right? But the government does actually monitor almost every part of it, right? Yeah. So, but yet it's functioning well. Yeah. So that's why this Hong Kong and Singapore is very interesting, right? Because Hong Kong is basically hands-off, Maybe now it might be different because China has, taken over, so it might be doing a bit more, but it doesn't look like changing the fundamentals, right? Because it's a system that has worked very well for centuries. And I can see that, when I lived in Hong Kong versus Singapore, it's very, even if you live there, you can tell the difference because in Hong Kong the rules are very simple. So people know about the rules, right? Okay, this is the rule, right? And then it doesn't change that often. It's quite stable. So that's why people can, sort of do the business based on that rule that doesn't change that much, okay? If you go to Singapore, it's different, okay? The rules change quite often, okay? Because the government is monitoring, right? So if this doesn't work well, they change, right? But then sometimes you don't even know what the rule is because the rules change so much, right? So that's why I don't know how people do this, but if you're doing business, you probably have to make sure that you follow the changes in the rules. But sometimes I feel that, well, the rules change, right? And sometimes you don't know where the rule is. Yeah. So, so that's sort of the impression I had in Singapore versus Hong Kong. Hong Kong, the rule is there, has been there for a long time, and I don't think many of the rules has changed that much. Okay. And the rules are very simple. Yeah. But Singapore, you can say it's more like a micromanagement, right? So they go into every sector and then they try to make the best, right? So that's why it's a very different, philosophy. But although Singapore had done, according to a development economist, Singapore had done everything correct according to the textbook, okay? So that's what I heard. Yeah. So anyway, so these two cities are very interesting, right? Okay. So yeah. So any questions about Singapore, Hong Kong? Okay. So the leftover topic is this, because in Asia there are large Islamic countries like Indonesia, right? Malaysia, right? So also if you go to South Asia, there's Pakistan. But actually, like Malaysia is one of the developed countries that has this so-called Islamic Finance Center, okay? And I'm not a specialist in this, but I have attended some, conferences before when I was in Singapore. So, so this is just showing you what the idea is, right? So basically, Islamic finance is basically is based on so-called Sharia law. So financial activity has to be consistent with the Sharia law, which is the Islamic law. And in finance, right, you basically supply your capital, right? Basically, you can say you invest, right? Or you put money in the bank, you receive in return interest rates, right? So that's basically there's a reward for providing the capital or the financing, right? But in Sharia law, the so-called interest rate is not allowed, right? So therefore, what they do is they are other ways to pay the reward, and so they do have some kind of a reward, and they are not supposed to pay, right? Fixed interest. So what they do is it's more like a profit sharing. Yeah. So, but there is a reward, right? But they don't call it like interest rates. Yeah. Yeah. And also they have some restrictions, right, on what to invest in, what kind of business, like alcohol and all these things are prohibited. Yeah. And so in Asia, as I said, like Malaysia and Indonesia, right? These are the two financial centers. But the thing is, there are Islamic banks or banking that follows these Islamic rules around the world. Okay, the largest Islamic banking center is, can you guess where? It's not Malaysia or Indonesia. It's London. Okay, London has the largest, right, Islamic banking center. In terms of, you can say London has the high concentration of banks or financial institutions that does, Islamic banking. But it's basically for these banks, it's business, right? Yeah. And in Singapore, yes, Singapore has, I think it was part of DBS. DBS is the Development Bank of Singapore. I think they do have a separate arm which does Islamic finance. Okay, so so it's business, right? So what they do is they want to attract Islamic money, mostly petrodollars, basically Middle Eastern countries, right? They have a huge amount of revenue from oil, so that's why these countries need to invest, right, or do something about their money. So that's why these banks around the world, global banks, establish Islamic banking section, and then they deal with these countries. Okay. And for working in those Islamic banking sector does not mean that you are religious. Doesn't have to be, okay? But that you have to know these basic rules, okay? So, but it's a Islamic bank. If it's in like Singapore or London, they do have to conform to the local rules or regulations of the banks, right? So as any other bank. So that's why they have to go across sometimes basically the conventional banking and Islamic banking sometimes have an overlap. And it does overlap, right? Because it's regulated by the same government. So, so that's why to work in this Islamic banking, you need to know both. Okay, so that's why it's very difficult to, I heard, it's very difficult to find someone who knows both. Okay, so for example, the person, the head person of this, I think it was the DBS arm, the Islamic banking, at that time, this was almost 10 years ago, is a British person, right? Well, he's not Islam, right? He used to work in London and then came to Singapore. But basically, he said, you have to hire people who can do both. Okay, so they did hire, people who specialize, right, in Islamic law, or at least know about this Islamic law. But at the same time, they have bankers who have experience, like him, right? So who can go look at both. So if you, actually, that's why he said there's a huge value as a, if you want to look for a job, there's a huge value for you if you know about this Islamic banking and Islamic law, but also the conventional banking. So if you have experience in both, okay? And also, when things get complicated, like in different financial products, right, like derivatives, all these things, so they do deal with these kind of a complicated products, but they do have to ask whether this is so-called Sharia compliant. Do they comply to the Sharia law? So then what they have to do is they have to ask a so-called a scholar, right? Scholar in Islamic law. So, but these scholars, there are not too many. So therefore, they do have someone, some in Malaysia, in each country, but there are not too many. And then I think, from what I heard, is that each scholar have different views, right? So it's not just one thing, one idea or one opinion. So that's why they sometimes have to ask many scholars, and some scholars don't agree, right? So, and some scholars may be very strict, and some scholars may be not that strict, right? And typically, like Malaysia is not that strict, okay? So that's why it's very interesting how this Islamic finance works. They have to always look at the Sharia law, but they're operating in a country where there are this bank regulators, right? The regulators oversee both, right? So they have to comply to the conventional banking as well, okay? So, but we don't really, encounter directly here, like in Australia, but there are banks that does this Islamic finance. Yeah. So, but in Asia, yes, if you go to places like Singapore, then you will see that because it's a financial center, they have all these Islamic bankers. Okay. Yeah. So if you go into this, it can be a full course, okay, full semester course. Yeah. But I'm not an expert in this. Okay. Okay. So anyway, yeah. So thank you very much. Yeah. Okay. So I guess I have enough, Asian languages here. Yeah. Okay. So any questions? Yeah, so let me see. Okay, yeah. Okay, so so next about the, well, this is, I'll do the summary, but it's basically, you know, preparation for your, well, basically summarize what you have learned, and then for the exam, there is a sample question on Watto. I don't know if you have seen this, right? It's some, exam will be something like that. You will have, I forgot how many, but maybe 20 multiple choice. I think it's 20, yeah. I might be wrong, yeah. It's not more than 30, for sure, yeah. It's 20 or 20 to 30 multiple questions, like the one sample questions that you see in the Watto. And then there will be several written questions. Written means you have essay questions that you answer, yeah. I might have said half page per question for the written questions, but I think this year I will allow, you know, 1 page, yeah, because I think last year I said half page and people said, well, that's too little, right? So it's okay, yeah, I'll let you write 1 page, yeah, for each question. Yeah, so so the questions will be around, you know, these things, right? So, well, below, these are the questions I'm going to ask, yeah. But I think it's better first to, you know, go through the lecture notes and then make sure you read or have read the required readings, okay? You don't have to read all the paper, all the whole paper, but you probably have to make sure you understand the key section or the message of each paper, okay? That is important because there will be questions based on papers, okay? Yeah. As I said, right, you don't have to read every line. Yeah, you just have to read, understand the basic question or the message, okay? And some of the tables or especially from academic papers, academic articles, have used the tables, right? So make sure that, because I will ask questions for those tables that I have presented in the slides, okay? So that's why you need to understand what's in the slide, what's in the table, right? And then you have to answer the message. What's the message from those tables? Yeah, so so there are yeah, so so basically for the first like 3 weeks, which was more like, you know, more general macro issues, so like Asia's growth, right? So but the first one is rather an open question, but as I mentioned, like what would be the challenge, right, for China and India to grow like this, right, at this speed, right? So is there any risk, right? So obviously we talked about, for China, the population, right? But, there are other things going on these days with trade wars and these things, but, but there are, more fundamental, right, things. And, so these are the things you may have to, think about. So this is more like an open question, Like for India, yes, there seems to be several issues, right, that we learn that, like the banking sector is very, small, still small. And also, like the corruption is still there, although it's a common law system, right? So there are, challenges. Although, if you look at the population, right, India looks very good, right, because there are a lot of young people, right? So I think these are the things that you can sort of, think about the future, okay? And then for the global imbalance, then that gap, right, savings investment gap, understanding of that savings investment gap is important, right? So remember the identity that I showed you, especially using the Economist, magazine, right? So make sure that you understand that identity, right? Savings, the current account, the savings investment gap, right? This will be extended to this current account balance, right? And the savings gap, domestic savings investment gap, and the government deficit, right? Remember these three variables in an identity. So that, with that identity, you can interpret, right? What's going on, like in the US, right? We call twin deficit, right? And typically, the government deficit and current account deficit are the big deficits. But then US has this problem of low savings rate, right? On the other hand, like Asia, especially like China, has this high savings rate and doesn't have much problem with a government balance, right? Except for Japan. Japan has a problem, right? But other than Japan, most country doesn't seem to have this, huge government deficit, okay? But of course, in the future, it might change, right? China also might change, right? But at this point, it doesn't seem to be a major problem. Okay, so these are, the issues, and then, so my recommendation is to, review that identity, please. So then the third thing that we talked about is currency, right? So how is this related to global balance? Well, as US says, Asian currencies are undervalued, right? So that's the argument. But when US has deficit, right, and Asia has surplus, then it means that there's more imports, right, into the US. In other words, a lot of export from Asia because price is low, right? Why the price is low? Because the currency is low, right? So that's the argument, right? So that's why the argument has been Asian currencies are so-called undervalued, right? So that's why US wants to appreciate, right, the Asian currencies. So that's what they try to do, right, with the Japanese yen in 1985, right? And then I think 5 central banks got together and they intervened in the currency market. Yen became very strong, right? But then it became too strong, so that's why Bank of Japan tried to stop it. But when they tried to stop it, they put a lot of liquidity in the Japanese economy. So that's how it created the bubble, right? So it actually did start from this currency issue, okay? So, and then there is this a paper that we read, right? This Dooley, Volkers, Landau about, they look at the current currency system as Bretton Woods II, right? Because especially until the Asian financial crisis in 1997-98, the currency has been very, very stable, right? So obviously it has been managed, right? After that, there has been a lot of liberalization of the financial markets, and then the currency became a bit more, more fluctuating. But still, this view of the Bretton Woods II is still there, right? Because still, like, especially yuan, Chinese yuan, is still managed, right? You don't see that much volatility, right? But basically, of the size of the economy, right, the Chinese export has become, and the currency is becoming more, important, especially with the U.S. So that's why, still it's more still like Bretton Woods II, okay? Yeah. So therefore, I think their view, still holds in some sense. Yeah. Okay, so that's the currency. But then next currency is the renminbi, right? We talked about how, what's the next one? Yeah, how renminbi can become a global currency. But then what we have to do is look at why US dollar is a global currency, right? And then by looking at the US currency, US dollars, then we can see how, right, a currency can become global currency. So yeah, so US is the largest trading partner, right? And many countries are willing to hold US dollar, right, as a reserve currency, right? If there's risk in US dollars of depreciating, then people won't hold it, right? But still, people hold it. And also, easy to trade and hold outside the U.S., right? So, and as I mentioned, euro currency market started like in 1960s, 1950s, but these started as a market where people traded U.S. dollars outside U.S. Okay, that's how euro currency market started. And then we had this, question, right? Big question about renminbi becoming a global currency. Yeah. So, so these are the things that you should review, and then, especially with the, remember in the currency function as a function of a currency, it has to be the value, right? Storage, right? It has to be used as reserve, and it has to be used as trade, right? And then also as a measure, right? So there's a function, right? Currency, the basic function of currency in the slides that I mentioned, and then we fit, where yuan stands globally, right? So I think you should make sure you understand that. Yeah. Question obviously will be answered around that issue, okay? Yeah, so, this for the global imbalance, make sure you understand that identity, and then make sure what you can, think about using the identity, okay? And then for currency, yeah, so make sure that you understand that table, right, about the function of currencies, and then how Chinese yuan stands, right, in that table. Okay. So that's about currency. Yeah. Financial centers, they, there's not too much, but U.S., Japan has large bond markets, right? But we know that because that's because the government had to issue a lot of bonds because the government was in deficit, right? Is in deficit. Okay. Yeah, I think this second question is very easy. Yes, diversification. Yeah. And yeah, so then about financial centers, right? About Shanghai possibly becoming leading financial centers. So these are the key issues, right? Yeah. Basically, it's the convertibility, right? Still, the renminbi is pretty much, controlled, right? You cannot freely use this, although now people can use it for trade more easily than before because the banks, right, provide services. And but still, it's not freely, right? It cannot come out freely from outside China, right? It cannot, people outside China cannot freely invest, right? So that's basically the convertibility, but it's not there. Yeah. And then still, right, the liberalization, although there has been a lot of things going on, right, like in the, especially between Hong Kong and Shenzhen, Shanghai markets, there is now people can invest, right, both sides, right? Chinese investors can invest outside, right, into Hong Kong market, and then Hong Kong outside, anyone can invest through Hong Kong, right? I think it was called Stock Connect, right? So these things are happening, yeah. So, and then, well, this is a more fundamental issue, right? Legal system, yeah, enforcement. And then, again, it's a bigger issue, right, is the involvement of the state, right? So it can be positive, it can be negative, right? Yeah. Extreme is Hong Kong, right? Extreme is Hong Kong. Government is hands-off, right? But as I said, yeah, Singapore is another example, right? Although government is hands-on, but can be a successful market. Okay. And then from here, it's basically the main part, right? Law and finance. And so I think now you understand this, but for make sure that you understand how we look at this agency problem. So what we learn in finance textbook is basically dispersed shareholders, right, and the managers, right? So the managers have control of the company while shareholders are dispersed, so they don't, right? So that's why the agency problem happens in basically Anglo-Saxon economy. But in outside US, UK, or Anglo-Saxon economies, basically the biggest problem is the agency problem between the controlling shareholders, the major shareholders, and the minority shareholders, right? Of course, there is a problem, agency problem between managers and shareholders as a whole, but I think in Asia, this was the major issue, right? Especially like in chaebols, right, where family has control, or some state ownership, right, where state has large control. Yeah, so so these are the things that were, the conflict of interest occurs. In case of Japan, it's the bank, right? So bank could be good, right? But on the other hand, there are the negative side, right? Because it can be very risks. You won't take the risk, right? It's too conservative. So, and it can, entrench, right? The relation between the bank and the firm can be entrenched. And also, during the financial crisis, the banks kept the bad loans, right? So if they withdraw the bad loans from the firms will go bankrupt. But that doesn't, if they do that, then they have to record a loss, right? The banks have to record this as a loss, but since the banks are in trouble, they cannot afford the loss, so therefore they just kept the so-called zombie firms alive. Yeah, so that's basically one of the examples of, in a sense, it's an entrenchment, right, between the bank and the firm. Okay, so these are basically, it's what is the conflict of interest, nature of conflict of interest, right, in Asian firms between managers, or is it managers versus others, or major shareholders versus minority shareholders. So it's not just one conflict of interest like what we learn in the textbook, which is managers and shareholders, right? It's not like that. Yeah. Okay, so that's basically the key point. And then when we look at the law, like we go back, right? Basically, if there's a good protection, good legal system, then the shareholders' rights, right, or the creditors' rights are, secure. But if you don't, then what we saw is like French law, right? Was not French civil law, didn't have very good rights. Okay. And then what we learned is how do these controlling shareholders maintain their power, right? So this is, at least like a pyramid structure, cross ownership. And also, there is this, superior voting rights. But with all these things, what happens is basically the ratio, right, between the voting right and the cash flow right. Right, so there will be a discrepancy. The voting right or the controlling right becomes greater, right, than the cash flow rights. So these are, like the mechanism that they can create this discrepancy, right? Yeah, and then we already know that there's concentration of ownership, and then well, these are the outcomes. Why some firms have more external finance, right? And also, if you have more external finance, you can grow faster, right? So that's what we saw in countries where there's good, institutions. And then we talked about dividends, right? Dividends can be used as a signal, right? Because, like, for example, like Samsung used to pay low dividends, right? And then use that, if they don't pay the dividends, the companies or the family can use that money to do something else, right? Which might not be in the interest of minority shareholders. But once people start to learn, right, these things, then Samsung said, I'm going to increase the dividends, right? So that's a signal saying that they will take good care of the minority shareholders. Yeah. So that's why for Asian firms, if they say they pay high dividends, then it might show their commitment, right? That they care about the shareholders, minority shareholders. Okay, yeah, so that's the thing. And then we talked about state capitalism. I think this part is quite, straightforward. How state controls, right? State ownership, state management, right? And also the way they restructured, right? When doing the privatization, they restructured in a way that the old company, right, old SOE can still control the listed firm. Okay. So that was one of the interesting part of this state capitalism. And then we saw a couple of or several empirical results, right? From academic articles. What is the impact of government control? And generally, it's negative, but sometimes there could be positive impacts. Yeah, and then we talk about China's growth puzzle, which is based on this article by Allen and Chen, right? And so this was called a puzzle because listed firms in China should have better protection of law, but the fact is that the growth came from non-listed private sector, right? So that's why it was a puzzle. Yeah. Yeah, so in the paper there is some, listed, there are some, clues why it was faster. Yeah. Okay. And then we talk about family capitalism, but family firms, first we look at the US, well actually they do quite well, right? Because family firms can solve this agency problem between the management and the shareholders, because both the managers and the shareholders could be the same, right, from the same family. So in that sense, it could, solve this problem. And then that's why we first look at the U.S. case, and it looks like they're doing well, but of course it depends. They were, right, when founder is the CEO, and then it's okay. But when like a second generation, third generation become a CEO, then is not as good. Yeah. So that was an empirical finding. And so therefore, is family a good organizational structure? And then we see how it looks like in Asia. But in Asia, we have a lot of family firms, right? And then it looks like in many of the cases, like as we saw, like in Korea, right? Also India as well. It's family control, but typically these are groups. So when it's a group, a corporate group, then it's very loosely connected, and we don't know where. People cannot see, investors cannot see how, they are connected. So therefore, they do a lot of tunneling, right? Tunneling or propping and all these things. So that's why if you are an investor in one of the firms, in a group firm, then that firm could be, well, if you are a minority shareholder in one of the firms, then the family can take the resources out, right, in many ways, right? So we saw that by, like mergers, right, and also private issues, right, all these things, right? So these things can happen, yeah. And also, the control and cash flow rights. If you have this very complicated, like a pyramid structure, the discrepancy between control and cash flow right becomes bigger, right? So we saw that. I showed you this in examples. Okay. Yeah, and then we talked about dividends, right? Yeah, and then Indian firms, yes. This is more informal financing because in India the banking sector is small, so they do have to rely on so-called alternative financing or internal financing, right? They use their own retained earnings. So in a sense, it's quite similar to Korean chaebol. And then we compared India and China. So obviously, family firms are dominant while China is state. And then how about the financing patterns? Indian firms rely on alternative financing, or you can say informal financing, right? And Chinese firms rely on government banks. But remember that in China, the banking system is more inefficient, right? It's big, but not that efficient. On the other hand, the market, stock market, is more efficient, right? In India, major problem is that the banking, right, system is very small. It's underdeveloped. And then this topic of microfinancing was a bit off. It was not really corporate finance, but it's part of this informal financing, right? So, so basically, it was two things. Well, well, for microfinancing can help poor people, but if there's a lot of high return, then it will attract, right, outside capital, commercial money. And then, of course, that's good because it will increase in size, but but the thing is, they call mission drift happens, right? So sometimes these commercial entities forget the original idea of helping the poor people. So I think this is like a clash of more. It's a clash of philosophy, right? Either business or helping poor people, right? So so I think that's where the problem is. But still, these microfinancing institutes seems to be doing well. Okay. So make sure that you review this, pros and cons of this, microfinancing and also commercialization, okay? And also the mechanism, right, of this microfinancing is basically, it's monitoring, right, in a group, right? You have a group of people and then basically you help each other or monitor each other. So that's how the banks, that's why the microfinance institution can get away with not having a collateral, right? Not taking a collateral or not asking for collateral. Right. And then corporate groups, well, we already talked about this, so I think it's okay. And then, yeah, the pros and cons of the banking system in Japan, right? So as I said, there are good sides, but there's a negative side as well. Okay. And then in Japan, it was this cross-shareholding, right? That was the one of the characteristics of Japanese corporate groups, and usually the banks are in the middle. But then there was actual problem, right, with this in corporate governance because as we saw from the example in Olympus, right, that these firms, especially group firms that hold shares, they don't do anything, right? They don't vote, right? They don't say anything. So that's why if something bad happened in one company, but they don't do anything, right? They don't try to correct it, right? In the case of Olympus, the CEO, the foreign CEO tried to do this, right? But then he was kicked out, right, instead. Yeah. That's because he couldn't get the support, which means could not get the vote, right? Because the large shareholders has to vote for extraordinary shareholder meeting, right? But they didn't do that, right? So that's why in case of Olympus, it really shows how these passive, right, shareholders, which is most likely due to this, cross holdings, right? They don't say anything, okay? Yeah, so this is, and then, but remember that the Japanese government, when they were criticized by the US government in early 90s about this cross holdings, they gave a couple of reasons, right? Yeah, They gave a couple of reasons. Well, each of them seems to make sense, but if you think in terms of the market mechanism, it's not always inconsistent, right? Like stable investors, right? Stable investor means if the company is not doing well, then the investors can sell, right? You don't have to hold on to a bad firm. So why do you hold on to a bad firm? But if you sell, the stock price goes down, so therefore the cost of capital for the firm goes up, right? So therefore, the management has to do something, right, to improve that situation. So that's why the stock market can act as a discipline mechanism. But if the investors are stable, they don't do anything, then the market mechanism doesn't work. And then again, defense against the threat of hostile takeovers. This is something we talk about in corporate finance, but since there is always a threat of takeover, if you are not doing good management, there will be always someone try to take over the company and say, I can manage better, right? And then shareholders will be happier. So that's how this takeover mechanism works as a market discipline, right? But in this case, if you just hold on to the shares, right, and then no one sells, then of course you can defend against hostile takeover, but you may not be able to correct a bad management, right? So basically, a bad management is basically protected, right? Can be protected. And also, it says long-term transactional relationships. Well, there might be, I think there is good things about long-term, business relationship, but again, it's related to this, right? Stable investors. So there are pros and cons, right? There are pros and cons. But there's always an argument against this. Yeah, I don't think American government was not convinced. I don't think American government was convinced with this answer. Okay. And then finally, we talked about GFC. But it covers a lot of things, but what government did, right? Try to save the banks first, right? But it took so many years. But but it had lessons, probably had lessons for other countries after the GFC. So so U.S. on the other hand did it slightly differently, right? There are similarities. There are similarities in what U.S. government did versus what the Japanese government did, but U.S. did it much better because they acted very fast, right? Yeah. So that's one thing. And lowering the interest rate to zero, that's the same, right? But they use like more physical policy, while Japan instead increased the tax, which was doing something opposite, right? So there are similarities, but there are, differences. Okay, so yeah, so then there was this argument of deleveraging, right, that we saw. So when there is a crisis, right, typically firms or household has been borrowing, right, until because of the asset price increase, firms and households tend to borrow more and then invest, right? And often this investment can be speculative investment. This was the case for U.S., right? It's a mortgage-backed security, so it's an investment into houses, real estate. And then when the market collapses, or the asset value collapses, then the asset value becomes smaller than the amount you borrow, right? So therefore, the natural thing for the firms or household to do is to reduce the leverage. So that's what typically happens after the crisis. So once that process is over, then finally the economy tends to recover. So that's what this Richard Koo was saying. Yeah. But of course, you need help from the government. For example, like fiscal policy, right? Which U.S. did, but Japan did not, right? Yeah. So